All right, we are recording. We are live and unscripted. I did my hair. Mateo, looked like you did yours too. Hey guys, I'm Chris Middleton, one of the co-founders here at Make Taxes Fair. Mateo is one of our amazing associates, part of the engine that helps the machine move forward, and I'm grateful that he's here with me today. We're going to be role playing, and we are live and unscripted, recording this for your benefit to give you an example of how we go about creating what we call your personal Fort Knox, like a roadmap, a visualization of your how to visualize your tax world and your business world, and how that can help when it comes to tax planning. So what we're going to do is Mateo's been given a set of instructions. We've lifted this from a actual client. Like this is somebody that we are currently working with, and changed the names to protect the innocent. But Mateo's going to be kind of feeding me information as we go through here to demonstrate how we create a roadmap. So with that being said, Mateo, tell me about who you are, and let's create your personal Fort Knox.
Yeah. Well, just to give you a little family background, I have a beautiful wife and two amazing little ones. I own two LLCs as of right now. One's going to be a self-storage management company, and the second one is going to be a real estate flipping company. I also do some real estate sales on the side, and then my wife is just a W-2 employee. So those are like our basic incomes. Not too flashy, not too much. We don't have a trust at all, so kind of just going with the flow and needing some tax advice because I got punched in the mouth by the IRS last year of about $100,000 of taxes. So really need some help going on.
So Mateo, what's your spouse's name? Just so names matter, right?
Yeah, it's going to be Kiara.
Perfect. And you said you have two kids.
Yep, Miko and Maisie.
And Maisie.
Been all with the M names.
Yeah, isn't your family all M names?
Yeah.
Yeah. So OCD people of the world unite, right? Cool. So you threw those at me pretty quick, but what I heard was self-storage, real estate sales, real estate flips, and your spouse has a W-2. Is that right?
Yep.
Perfect. All right. Yep. So what I've done here at the bottom is I put, Mateo and Kiara, they're representing their family, and that's their personal 1040, married, filing jointly, right?
Yep.
With the couple of kiddos. And one of the first things that Mateo, you mentioned, you do not currently have a living trust, right? Or you do not have living trust. And we're going to highlight that we're going to make that a red, because that's something that we eventually need to stop and address. And a lot of people ask the question, like, how does a trust impact my taxes? There are different types of trusts. Revocable living trusts are what the IRS calls disregarded. So you'll notice here, we kind of stack them. Like, the IRS says, hey, that's great that you have that, but any income is going to just pass right through that you have. We're going to ignore the trust because it's a living trust, and that's going to be reported on your 1040. If it was an example of, you had an estate trust situation that filed a 1041, and maybe there's an example of, hey, I have an interest in a property or something that grandma or grandpa left, and that's being run through an estate, and that's coming out to me. That would be an example of like a irrevocable or a non-living trust. Now, for the record, we are not, Mateo, are we attorneys that Make Taxes Fair?
No, we are not. Too much schooling.
The joke is we do not pretend to be on Zoom webinar recordings, anything like that. So we're here today just to state, most of the time, trusts really don't impact your tax situation or tax planning unless it's an irrevocable trust. And with the irrevocable conversation, that's really a conversation around, do we want to do that? Because once we set that up and make it irrevocable, then it's set in stone. And there's a lot of restrictions that kind of prevent us from being able to do anything about that, right? So for this illustration, we're going to keep it simple. So you'll notice I kind of created these bubbles, and I'm going to actually take them now, and we're going to kind of put them on two separate sides, and we're going to draw a line down the middle here.
Okay.
And this side we're going to call active. So these are active income activities. And the other side, and Mateo, you're studying for your CPA at this moment, like we're going to pull you out of character here. This side is passive income. What's the difference? And we're live and unscripted, everybody. So Mateo, I'm putting you on the spot. Difference between active and passive income. Why did I put the real estate flips over here and real estate sales over there?
Yeah. So in this situation here, the active income is more likely than not, if you're self-employed, is going to go on Schedule C. That will be just taxed as ordinary income. So like if you have your wages, your business income, anything like that, that's going to be taxed at your tax rate, ordinary tax rate. As in the passive income will be on a Schedule E and will be taxed as your just your ordinary rate. So your self-employment will get taxed as self-employment income, and it will get taxed at your ordinary rate, whereas your passive is just gonna be your ordinary tax rate. There's also sorry, what was that?
No.
Oh,
carry on.
I was making sure. Might have to edit some of this. But yeah, you're just gonna you cannot, the biggest rule is that you cannot offset passive income with active income and vice versa.
Yeah,
so
generally
that's the must split.
Generally speaking, and there are exceptions, but you're spot on. So when we're creating your personal Fort Knox, right, when we're looking at legal structure, we want to kind of figure out, okay, what's passive, what's active, and segregate by those into those realms. So I put the real estate flips. Generally, those are considered capital gain, right? Which would be considered passive income, and capital gain or loss, hopefully your gain if you're flipping real estate. And then real estate rentals, same type of deal. Now, you notice here, I put into, for the sake of the illustration here, we put into this, Mateo's operating as a Schedule C for his real estate sales activity. Up here, the self-storage facility, we've put into, he has it currently in an LLC, but I notated no S Corp election. So it's important to realize when you're talking about LLCs or S Corps or C Corps, if you go to an attorney and say, I want to create an S Corp, I've heard S Corps are great. Well, before we get even to whether you should be an S Corp, it's helpful to map all this out to figure out, what do you got going on in your world, and is the S Corp an appropriate vehicle for you? But if you go to an attorney and say, I want to create an S Corp, they're going to say, cool, do you want to be an LLC or do you want to be a C Corp? Because there is no such thing as an S Corp. It's something that you elect. You take a LLC or a C Corp and you make the S Corp election. So before we even get to, should you be an S Corp, should you be an LLC, should you be a C Corp, like we want to figure out what's your current state. And that's the whole goal of this exercise, is to figure out what's your current state, what are you currently operating as and have. And so the LLC, the real estate flips, I think, Mateo, you had told me that was an LLC.
Yep.
Again, no S corp election.
Election. Yep.
And in the process of our conversation, and this isn't in my notes from our pre-meeting, but we have you did have a real estate rental, right?
Yep.
And you currently, there's no LLC involved in that, right? It's just held by you personally, which some
Whatever.
people say, do I need an LLC or do I need a corp? The answer is not always, right? So this is the exercise that we want people to go through and say, okay, here's what we got going on when it comes to the activity that we have in our life and in our world. And so you'll see here, we can kind of connect the dots. If there was an LLC here that was maybe a partially owned, we would say a 50-50 with a partner, we would indicate that there. But when we're at Make Taxes Fair working with our clients initially, we help visualize what you got going on by kind of creating some simple bubble. We're using Google Slides in this. You can use PowerPoint. You can just draw it out on a piece of paper. But this is very helpful visually to see what's going on in your world. Now, I'm going to dive in here a little bit deeper because the idea is that we want to help you kind of create a visual map. In this case with this person, so I duplicated that slide and just copied it over. In this case, we would want to say, okay, here's the first slide would be our current state. So let's label this as current state. And this next slide is going to be what we would kind of look at and say, here's our future state. And so in this case, Mateo, your real estate sales business is approaching a level of production where you're over 70, 80 grand a year.
Yeah.
And many people have heard at that point, hey, when should I make myself an S corp or an LLC? Fun fact, in some states, drilling down on the real estate niche, for example, Texas, California, you're actually not allowed to be an LLC.
Oh.
So keep in mind, like in some states, contractors, plumbers, drywall contractors, general contractors. So it's very important on a state by state basis to say, what's my niche? What am I legally allowed to be? Now, I'm in California and Mateo's in California. We work with clients that are like, oh, I've been operating as an LLC, as a real estate agent for years, and Department of Real Estate in the state have never bothered me. Cool. If you go into and drill down into their bylaws and what the Department of Real Estate in California wants, they actually don't want you to be an LLC. They want you to be a C Corp and make the S Corp election. So just because you have done it that way may not mean that they may come after you. So bottom line is, before you go run out and create an LLC, check with an attorney, a competent niche specific attorney, and say, hey, here's my business, here's my niche, here's what I do. What should I be? Should I be an LLC? Should I be a C Corp? Or are there no restrictions? And which is better of the two? So in this case, because again, we're looking here at the future state. So we're gonna say this is let's leave that as is. We're gonna take your real estate sales, because at this juncture, we've got about 90K in gross or net, not gross, but net profit. And so at this juncture, we're going to create a corp and make the S election, right? And so now that's gonna be something that we're gonna have to address as far as compensation, because now we're gonna have a W-2 that will also be issued by your corporation for Mateo, right? and that will be issued by your real estate sales. The self-storage facility, currently we've got the self-storage property owned by the LLC and the self-storage management operations also encapsulated in that LLC. So there may be a conversation around, can we take that self-storage, shift that over here to be we would leave the self-storage property in the LLC, because the rents and everything collected are going to be passive in the passive category. But now the operations, self-storage operations, we're going to actually break over into the active, and we're going to do a management company that will also deal with the management of your real estate rentals as well as the self-storage. So that would be kind of the value in this simple case. And this is, we're taking a live person, a live set of data, and saying, here's their current state, how they kind of have things built out. And you can see now that we have a clear understanding of how things are structured legally, now we can start to make recommendations and say, okay, what things should be done to clean up your legal structure, separate some liability, separate the passive income from the active income operations, and what strategies does that unlock? So that is your kind of overview of how we go about creating that personal Fort Knox. Mateo, and again, we're live and unscripted, so he didn't know I was going to ask him this question. How has that helped you when we've been working with live clients to kind of understand their world when we've created these visual maps?
As a tax strategist, and learning from Chris, you really understand the legal structure. That's like the number one thing we home down here at Make Texas Fairs. That's the first thing that we home down. And it really breaks down, okay, what tax strategies are going to fit with your business, right? And we go through this, and we don't really know. We're kind of blinded at first, but it really helps us go through it with you, and make sure that, okay, this is the picture that you have. This is your situation. How could we help you in your situation going forward?
Yeah, I agree. It gives clarity, because once you see, okay, here's what's happening, here's why that's happening, how did that come about, how long has that been in that, moving, for example, the self-storage out of the LLC, we wouldn't want to do that. That could trigger a sale or a tax event, so we want to leave that. But can we separate out the passive from the active, and are there benefits to doing that? In this case, we've come across people that in their current state, they might have one LLC, and they've got like their self-storage, they've got 2 or 3 other properties all bundled into the same LLC, and that can cross-pollinate for contamination for legal liability purposes, and also tracking of income and expenses. Things get muddled. So there can be some value in saying, hey, let's break this out and create these different structure than we currently have. So all that being said, I hope this is helpful. Folks, if you're watching this and you're like, hey, this is something that your takeaway, create your personal, like, start with a blank piece of paper, blank canvas, and just, you can quickly figure out, okay, well, here's me, here's my situation, spouse, kids, do I have a living trust, yes or no? That's an element that we eventually address. And again, we are not attorneys. We do not pretend to be attorneys. We just help people identify, there's a gap in your financial world. that living trust should be addressed. Understanding the tax structures that you have. And so your kind of task in this would be to map out and say, okay, what's in the active column? What's in the passive column? How do these things connect to me and feed down to me in my world and in my business? So all that being said, we hope this is helpful. Check it out. And this is all part of we're doing this recording as part of our kind of DIY self-help series inside of our school community. We are going to be posting this on YouTube. So if you're seeing this on YouTube and you want to learn more about this methodology and how we operate at Make Taxes Fair, you can check that out at maketaxesfair.com/community. If you're already inside of the community, folks, we like to say at Make Taxes Fair that I'm going to stop sharing my screen. Friends don't let friends overpay the government. So that's our slogan. We've trademarked that. I'm very proud of that. So if this has been helpful to you today, we invite you to share this with a friend. And we'd love to help you out in this way and hopefully maybe talk to you eventually. All right. Thanks, Mateo, for jumping on and let me put you on the spot. It's been fun. We'll do it again sometime. All right.
Happy.
And let's stop recording. There we go. Sorry, everybody. I'm going to stop recording now. If you can't be good, be careful. Bye for now.